Hi and welcome to inderesTV. Earnings season is on and Wärtsilä reported today its first quarter report of 2024. And here with me is the company CEO Håkan Agnewall. Hi Håkan.
Nice to meet you again.
Let's talk about Wärtsilä's financial performance and other topics related to you. But let's start the latest, the quarter numbers.
Yes.
What were the highlights?
I think the overall continuous journey to meet our financial targets. So now we came in with a double-digit 10% comparable operating margin. And the other element that we continue to see a strong order intake. I mean, organic order intake up 17% quarter-on-quarter.
What is driving this huge momentum, if I can say so?
I think it's our strategy playing out. But if we start on the marine side, it's a high level of utilization of vessels in general, and certainly in our core segments, which is about cruise, ferries, offshore specialty vessels, so high level of utilization. The other piece of that equation is also the decarbonization transition, because last year the new IMO rules kicked in. Carbon intensity index is really driving the strategic thinking among fleet owners. 1st of January this year, carbon tax is introduced in the EU by EU in the maritime sector. So there is a lot of focus on decarbonization, and it basically thinking about new vessels. You know, how do you build in fuel flexibility? So it's about new fuels and how you combine that, but also retrofits. There is a fleet out there in the world of about 100,000 vessels, and many of them needs to be retrofitted, and that also gives us an opportunity, because it could be upgrades to new fuels, introducing batteries and hybrid solutions, or actually derating engines, making them smaller, because one thing is to cruise slower, so to say. So that's the key drivers on the marine side. On the energy side, it is the shift in the world to more and more renewables. With the balancing power, we had some good thermal balancing orders in Texas, US. A little bit slower this quarter on order intake on storage, but it's more, we took a periodization thing, so we are not overall concerned. We see growth opportunities. And both in marine and energy services continue to grow. We have this strategy concept of moving up the service value ladder, so moving from more transactional to agreements, and it's really playing out in a good way.
You have spoken many times that this is a journey, and it seems that you are taking the first step, if I may say so.
Well, it's not the first, but it's the early steps, but we continue in a good way, and there will be ample opportunities as we go forward.
Yes. If we look at your cash flow, it continued to show good development in the quarter. So what factors have been driving that improvement?
Yeah, so more than 200 million cash flow, and I think that is pretty remarkable. After all, so we had a very strong cash flow in Q4. So there are a number of factors that is driving the Q1 cash flow. I mean, one thing is, because of our positive order intake, we also have down payments. So that is customers paying down on the contracts. We worked on our net working capital, so working with capital efficiency. That is the step-by-step journey, and it certainly continues, so to say. And then I would say the increased service sales, that is also, the cash turnover is quick on the service sales, so that is also contributing. So those are the three factors.
Yes. You have spoken before that there is 4 value ladders in the service business, and you want to climb to the higher ladder. What is going on at the moment? How well you have performed on this level?
Yeah. So basically, you're right. The ideal world, we move everybody from transactional, which is the first step, all the way to the fourth step. But in reality, it's a lot about moving some customers from the first to the second, some customers from second 2.1 to second 2.2. So it's a gradual journey, and it's working out. It's one of the major growth drivers. We see on the fourth step, on the performance-based contracts, it's still a smaller share of our business, but it is growing. And still the fundamentals, we have about 30% of our whole fleet under service agreement coverage. So of course there is ample growth opportunity, and I think the key metric still holds, and that is the renewal rate of our agreements. It's over 90%, and for me that is the ultimate proof point that our customers are appreciating. Otherwise they wouldn't agree. They wouldn't renew.
Yeah, that's good to hear. Then to marine prospect, what are your prospects in terms of orders for key vessels right now?
I mean, it is about our core segments. So I talked about it: cruise, ferries, offshore specialty vessels. There's a lot of opportunities. Those segments, and that goes back to the Clarkson data, the industry data. Those segments, if you take the coming 5, 6, 7 years, are predicted to grow by double digit, whereas the rest of the marine industry is more single digit, maybe 2 or 3%. And we see that growth in our core segments playing out. And the other one, we talked about it already, is the decarbonization with the upgrades and the opportunities that's great.
Okay. How you see your market shares evolving? Why you win the contracts when you win?
I think that we are industry leading in fuel efficiency and fuel flexibility. I would say we have the broadest portfolio in the industry for the new green solutions, and that's positive. I mean, we have in the marine side, I would say we have normally about 45% market share on 4-stroke. That market share is even stronger on the new type, on the engines for the new fuels. There we are talking about 70%. So I think we are slowly eating market share.
Yeah. If we go to energy storage business.
And I would say, why are customers choosing us? So we have a great product portfolio, but the other element, we have a great service support for our customers. Because at the end of the day, what the customers value is uptime reliability, and that they can sleep in the night, so to say, and rely that the equipment is operating. So the service business is a really vital component of that offering.
All right, let's continue to energy storage business. How do you see the market outlook at the moment? What are the factors that is driving?
So storage is growing very fast, and there are ample growth opportunities all over the world. We are focusing as part of our strategy on certain geographical segments. For us, it's a lot about US, Australia, UK, a couple of Benelux, a couple of countries in Europe, and we see ample growth opportunities. It's very much driven by the increased share of renewables and therefore the need for balancing power, and it's a clear trend.
Do you want to continue your next question?
No, so order intake was a bit slow on the storage side in Q1, but that is more of a periodization thing than a trend shift or anything.
Yes, I understand. What about the profitability on there?
So profitability, comparable operating margin at 10%, very encouraging. It's a step in the right direction, but of course, we had a very strong mix. We talk about the mix, and that's the share of service business in relation to new build. Yeah. Because the profitability on the service business is higher than the new build. And in this quarter, we actually had 63% of the overall sales were service sales. And that is unusually high. Normally it's around 50. So that contributes in a positive way to the increasing operating margin. On the other side, we had a low sales, so we have lower operational leverage, and we still came out at 10%. So that's why I say Q1 was really a step in the right direction. It's a proof point that we are moving in the right direction, but we are not where we need to be at our 12%, and we still have a gap and a journey to take.
Yes. I still want to ask the profitability of energy storage business. Yes. How would that have development?
So I mean, we follow it, and we communicate it 12-month rolling, and it's still positive. And I would say it's going in the right direction. Of course, in Q1, considering the sales was down, it was a bit more challenging, but the general trend is clear. The profitability of storage is improving.
I know that many analysts have already asked this, but what about the strategies review on that? Do you have anything to comment?
We launched that last year, and we are still working on it. We didn't set a fixed time when to come back. We are still not doing that. So the review is ongoing, and when we have made up our mind and we are formulated, we will come back. But for now, it's ongoing.
Yeah, that's clear. Final questions question. If we look at the whole world economy, there are many uncertainties, conflicts all over the world. So what are the main risks that you think that could affect you the most if they will realize?
So I mean, of course, the interest rate and the volatility in the interest rate, I think that is always a concern for all investors. And,
yes.
you know, and we do see, I mean, the trend now is that interest rates are coming down and we see that stock prices are up.
We hope so.
Yeah. So of course, interest rate will affect us. And the volatility in the same. I mean, the current geopolitical tension areas, Russia, war in Ukraine, Middle East, has currently no significant impact, I would say. Logistics chains are fairly intact, although, you know, Suez is closed and Panama Canal capacity has gone down. I think the logistics flow is still there. There is still about a little bit of the inflation going on work compensation, so to say, but that is more also stabilizing in general, so to say. So I think it's the major thing is, you know, where is the general economy going? So far we see it positive. The big, you could say, impact on Wärtsilä from a macro perspective is, of course, how fast the decarbonization journey will take. And that's not it's not a quarter or two, but are we talking 5, 10 years or 20 years? And I would say the faster the transition will go, the better it is for Wärtsilä. The better it is for the world, but also the better it is for Wärtsilä and Wärtsilä shareholders, because we have so much to offer with the solutions that we can bring to our two industries.
Yeah. It seems that the momentum is strong and keep continuing that.
Yeah, I mean, we have, you know, we reiterated our demand outlook, basically looking at 12 months from now, and we said that we expect demand to be better than the previous 12 months. So we have a positive outlook, yeah.
Thanks, Håkan.
Thanks a lot.
Thank you.